What's going on, everybody? It's Stas here. So inflation, good old inflation, that crappy thing that steals our purchasing power over time. I want to go over how you can hedge against inflation in this video. We'll talk a little bit about inflation and where it's kind of creeped its way into these markets. We'll go over that as well. And I want to show you all my personal collection of one way that I'm hedging against inflation, and we'll go over that here in a little bit. So if you all find value, hit the like button, subscribe, check out all the free resources down below, the Discord chat. If you guys want $30 from M1 Finance as well, $10 from Coinbase, all of those are linked down below. So let's get into it, guys. And we all know 2020 was a crazy year, not only in the stock market, not only in the economy, but just life in general, right? We saw the CV take over, the markets collapsed, right? The financial system really got hit hard, right? And that is why we saw the Federal Reserve do what they did, and they printed so much money last year. The balance sheet exploded, and we've heard this, I'm sure you've heard this, up to 40% of the US dollars that are out there were printed in 2020. What a freaking crazy stat that is, right? And if you all understand, supply and demand, well, if there's a crap ton of supply of dollars, a lot of dollars flooding into the system, well, that is inflation. That's going to go somewhere. Those dollars have to go somewhere. So we've seen inflation in asset prices, stocks, right? We've seen it in real estate. We've seen it in gold. We've seen it in silver. And we've seen it in many other places, right? Take a look here at SPY. The markets collapsed from 303, or rather 330 on SPY, all the way down to 220 last year in March, and the Fed started pumping in so much money. And what you guys know is the Fed, not only did they print so much money, but the speed to which they reacted to this drop was record timing, because back in 08, and the Fed even said this, right? Back in 08, when the markets collapsed, then they didn't react with the monetary stimulus as quickly as they did in 2020, and that is why we saw that V-shaped snapback recovery, because they plowed so much money into the market. And we saw the inflation, and quite frankly, we're still seeing the inflation in the stock market. From 220 on SPY all the way to 420, we pretty much saw a double up in the S&P 500, which is not normal. That is a good sign of inflation. And like I said, real estate, are you guys seeing how crazy the real estate market is right now? I'm not in the market myself looking to buy houses, and quite frankly, I'm happy I'm not at this point, because everything's getting bid up. The prices are ridiculous. That is another sign of inflation. Lumber prices, they're up almost 200% compared to this time last year. Building materials in general, to build, construct a home, a building, those are up a ton, guys. Oil is up a ton, and I can go on and on and on. A lot of these prices are going up, and people usually calculate, the government, shall I say, calculates inflation using the CPI, the Consumer Price Index, and the truth is, this doesn't calculate everything. It leaves out a lot of stuff, but the CPI does represent changes in prices of all goods and services purchased for consumption by urban households. And like I said, it's not including things like income taxes, investment items like stocks, bonds, life insurance. That stuff's not included in the CPI. And prices for the goods and services used to calculate the CPI are collected in 75 urban areas throughout the country and from about 23,000 retail service establishments. Data on rents are collected from about 50,000 landlords or tenants. And typically things like food and beverage, housing, clothing, things like that, and then there's other things as well, but things like that are included in the CPI. And I don't want to get too deep into it. You guys should go on the government website and read a lot deeper into CPI for yourselves, but overall, it leaves a lot out of the picture. And you guys can see on these charts right here, let me pull them up for you all. You can see the 12-month percentage change consumer price index in selected categories in March 2021 All items roughly 2.5%. Food is almost close to 3.5%. Energy is well over 10% of an increase, and all items less food than energy is right around 2-ish%. And on the bottom, you can see there was an increase of 0.6% in the CPI in March of 2021. So you guys get an understanding here of what CPI is, what inflation is. Pretty much when there's an increase of the monetary supply out there, we are getting inflation, and it's making its way into these different markets. So how are you going to hedge against inflation? That is the golden question. And for me, guys, one of my favorite ways, and call it old school, call me a boomer, although I'm in my mid-20s, guys, I do like the boomer way of thinking sometimes. I like gold, I like silver, and I like gold stocks, right? These are three ways that I personally hedge against inflation. And before we go into that and I show you guys my gold collection, you're going to want to see that, so stay tuned. You could also obviously hedge against inflation by buying stocks, right? I mean, did you guys see the S&P 500 go up? Could you imagine if you didn't buy stocks, right? Let's say you held that money in cash. Well, inflation is going to eat away your cash, but if you put that money in the S&P, you could have made 50% in the past year, 100%, well, maybe not 100%, but 30%, 70%, depending on where you bought, and that is obviously a lot higher than what the rate of inflation is, or at least the CPI. And again, guys, the CPI, I kind of take it with a grain of salt, but overall, you can hedge against inflation by being in the stock market, owning businesses, actual assets, right, and owning a house, let's say, for example, real estate investing, because you kind of have price control there with rent. You could increase your rent, and that's kind of a way to hedge against inflation. But back to gold, right? /GC is gold, and this is a great way to hedge against inflation because you can't just print gold out of nowhere. You have to mine gold, and there's only a certain amount of gold each year that's mined, and people know they can predict how much gold is going to be mined every single year. And look at the gold price over the past 20 years. It's done pretty well. If you bought in 2001, you would have made about a 10, maybe not a 10x return, but a good 5-6x return from 260 an ounce to 18 an ounce. And typically we've seen people flock to gold for years, guys, as the economy's been shaky, as there's been money printing, because historically, like I said, people have always looked at gold and silver as a safe haven. And there's a reason why gold went up from $1,200 an ounce about 2 years ago all the way to $2,100 an ounce back in 2020. Now it's at $1,700. And if we look at this chart, I don't want to break too many technicals down in this video, but if we look at this chart, we broke 1760 on gold. That's a good sign, guys. The downtrend's breaking here on the 4-hour, and I believe we're going to go to 1850 in the very short term, and if that breaks, we're going to see an even bigger push. And before we talk about other ways to hedge against inflation, let me show you all my gold collection, and it's nothing crazy. I started buying gold literally within the past year, 12 months ago. I didn't have any gold, barely. Now I have a decent amount. Nothing too crazy still, but I've been buying and accumulating over the years, over the year. So let me show you what I have. Alrighty, guys, so let's run through this very quickly. This is a gold chain. This is not pure gold. I don't really want to talk about this one. But I have that, and I also have this bracelet, which I got when I was baptized years and years ago. This is not pure gold, but it's got some gold in it, obviously. It's plated. And when we look at this is one of the first pieces I bought. This is a 10 gram. You guys can see it here, 10 gram fine gold. This is fine gold, pure gold. And when I get stuff like this, guys, I never cut it out. I never do anything like that. I always keep it in the original packaging just in case I want to sell it later on, right? Because who knows, maybe I'll sell this stuff one day and buy it, put it in real estate or so forth. So that is one thing I have. And then I have five, right? Or maybe 4. You guys can see these right here. These are amazing. The Canada maple leaf coins, you guys can see. These are 1/4 ounce coins, and I have about 5 of them. And one of them is an American Eagle. I'll show you that in a second. But I have 4 of these ones, and these are pure gold. And the American Eagle, you guys can't tell the difference in color. Maybe you can. This one's got a little bit of copper in it, I believe, but it's still quarter-ounce fine gold, but it has additional copper in it, and the coin itself is a little bit bigger than this one right here, but they both have the same gold content. And you can see this one's a little bit shinier. It's a little bit more yellow than this one. I'm not sure if you guys can tell. Either way, I have a bunch of these, right? You can see 1, 2, 3, 4, and where's the 5th one? Here's the 5th one. You can see I have 5 of those, each a quarter-ounce. This one's 10 grams, like I said, right, guys? And we have these ones right here, and these were my first purchase ever. I got 5, I believe, 5 of these little gram bars, and each of these, at this point in time, each of these are worth, guess how much, guys? About 60 bucks. Could you imagine this little thing right here is 60 bucks, but it's 1 gram of pure gold. And admittedly, I bought these at first and I paid a pretty big premium. And the way that you do this, guys, is, well, the way it goes, shall I say, the larger amount of weight when it comes to gold you're buying, the less premium you're going to pay. So me buying these gram bars was a learning lesson because I paid too much in premium for a metal or for an amount like this. I should have just went straight to buying the quarter-ounce coins, and that's what I've been doing as of late. And I haven't really bought gold in a couple months, but this is what I have. And overall, it's about, I don't know off the top of my head, a couple $1,000s worth of gold right here. So this is my personal collection. And I almost forgot to mention, guys, this one right here is a very sentimental one for me. I didn't buy this. My grandfather, well, he passed away. My grandmother gave this to me, right, recently, within the past year. She gave me this, and this is a coin from 1988. And let me show you this one. This is pretty cool. You guys can see it right here. United States Mint 1988 Olympic coin. It's got this raggedy old school looking, or it's not old school, but it just looks like really old, which I kind of like. And I heard this was buried in the backyard. I'm not sure why he would bury it, but whatever, that's not for this video. You guys can see here, this is, I think it's another quarter-ounce coin. I would never sell this one. I mean, this one I'm holding for life. And you guys can see it. It's looking pretty cool. You can see that shine right there. So overall, that is my collection of gold. So yeah, guys, that was my collection of gold, and that is my personal favorite way of hedging against inflation. Another way you could argue is a hedge against inflation is cryptocurrency. I also own some Bitcoin. You guys know that, and I've made a ton of videos on Bitcoin, so search my name and Bitcoin, and you guys can see that. And another way I'm hedging against inflation is gold stocks, and one stock I own is Barrick Gold. And what better way to invest in gold than by buying the companies that mine the gold? And this is a way that you can really leverage your bet on gold. And I started buying Barrick Gold at about $19. Now it's at $23. I'm already up a nice chunk on the position. They also pay a dividend. So gold stocks, I really like them. And you could also look at foreign stocks if you want to get out of the U.S. stock market or out of the U.S. dollar. You could look at foreign currencies, right? Because the U.S. dollar is losing its value day after day after day. You can maybe plot your money over in some other country that has a stronger currency. So these are a couple of ways you can hedge against inflation, how I'm hedging against inflation, and what inflation is, what CPI is in general, and how inflation has found its way in different markets. So I hope you guys found value in this. If you did, make sure to hit that like button, subscribe to the channel, and again, let me know in the comments, how are you guys hedging against inflation? I would love to know. And make sure to check out my Patreon if you want to support me and the channel a bit further. And of course, you get a bunch of perks being on Patreon, being in the Patreon, and that's linked down below. Same with the Discord chat. That is free, the Discord chat. And you guys could get 30 bucks from M1 Finance and 10 bucks from Coinbase. All of those, like I said, are linked down below. I'll catch you all in the next video. Thanks for watching. As always, keep crushing the markets, guys. Stay safe out there. Peace out.